Hello, fellow risk takers, and welcome to my worst investment ever. Stories of loss to keep you winning. In our community, we know that to win in investing, you must take risk, but to win big, you've got to reduce it. To join our community, go to myworstinvestmentever.com and receive 5 free benefits. First, you get the risk reduction checklist I've created from the lessons I've learned from all my guests. Second, you get my weekly email to help you increase your investment return. Third, you get a 25% discount on all A Stotts Academy courses. Fourth, you get access to our Facebook community to get to know guests and fellow listeners. And finally, you get my curated list of the top 10 podcast episodes. Fellow risk takers, this is your worst podcast host, Andrew Stotts from A Stotts Academy, and I'm here with featured guest Karen Briscoe. Karen, are you ready to rock?
Yeah, let's do this.
That's my radio voice. Yeah, let's rock.
Yeah, you're in the right field.
Yes, exactly. I should have had a microphone a long time
You
ago,
should have.
ladies
They
and
should have given
gentlemen.
you one.
Let me introduce you to our audience. Karen Briscoe is the creator of the transformative 5-minute success concept. Who doesn't like that? I love that. Her first book, Real Estate Success, is in 5 minutes a day. Secrets of a Top Agent Revealed offers a combination of information and inspiration delivered through memorable stories. You'll also notice that it's got amazing reviews on Amazon. I believe right now you've got let's see, what do you got? 4.7 out of 5 with 164 reviews. I'd say that's pretty darn successful. Karen is the host also of the 5-Minute Success podcast, which has ranked number 1 on Overcast's most recommended in the business category. But beyond all that, Karen is the principal owner of the Huckabee Briscoe Conroy Group with Keller Williams. The group has been recognized by the Wall Street Journal as one of the 250 top realtor teams in the United States. My goodness, Karen, take a minute and fill any further tidbits about your life.
Well, I'm delighted to be with the worst investment community and you, Andrew, and to talk about a lot of these learning lessons that have come along the way. And I know that you just did the highlights there, so we're going to get in
Mm,
deeper.
yeah, exciting. And here I am in beautiful Bangkok, Thailand, and I'm just curious, since I got an expert on the line, tell us a little snippet of what the heck is happening in the U.S. housing market, property market. How do you tell us a little bit about that?
Well, you shared that I am what's known as a mega real estate agent, which means I run a team inside of Keller Williams. And in 2020, our team sold over 100 million, on track in 2021 to do the same. So we sell a lot of houses, and I feel like I've through the years have become kind of the economist of the area. I write a market study and obviously author of books and a podcast. So what is going on is several factors. The easiest one to explain first is COVID.
Mm,
So during the early days of COVID, when there were stay-at-home orders, people found out that their homes maybe didn't meet all their needs. And if they realized that if they were going to be working from home, educating from home, entertaining from home, exercising from home, everything from home, that they wanted to make a change. And I think
mm,
that it created a lot of urgency for people because they were like, well, gosh, if I don't do this now, when am I going to do it? I want to be where I want to be if something were to happen. So that started the role, but we were going to already have a housing shortage in the United States for several reasons. The first one being the largest generation ever in the United States was the baby boomers, and that population is about 79 million. And most housing was built for the baby boomers
mm,
after World War II. If you study the history of economies, and that housing stock hasn't really changed. There is new housing, but it has not kept pace. In fact, the other key aspect to this is that in the decade since 08, 09, 2019, 2021, in that decade, the builders built about a fifth of the amount of housing stock that they should have built. And I'm talking about new houses, not just replacement houses or
Mm,
infill, but actually, and builders need land to do that. They need land for single family, they need land for townhomes. They can build condominiums and generate a lot of housing, but during the time of COVID, people wanted natural physical distancing.
mm,
So the baby boomers normally would be at a state in their life where they would be starting to downsize, right size. Many of them had started to move towards more of urbanization and smaller footprint. And then COVID happened, and they're like, everybody came home. I can't do that now. I need to keep all my space. In fact, I think I'll buy a second home so I have a place to go in case we need a place to go.
mm.
The silvers, which are the older generation, older than the baby boomers now, they really are not likely to want to go into assisted living or nursing homes. Now, they may move in with family, but they're
Mm.
not leaving their housing, which they would normally be doing.
That's interesting. I didn't think
But the
about that. Yep.
biggest wave that's coming down the pike is the millennials.
Mm,
So the millennials are 91 million. So there's about 12 million more millennials than there are baby boomers. Remember how I said most housing was built for the baby boomers? We were already going to run out of housing. It was coming. We just didn't know when, because the millennials had been delaying their adulting years, and they were extending their 20s and 30s. And but with COVID, many said, well, gosh, if we're all stuck at home, we might as well get a dog, get married, buy a house. And we were going to run out anyhow. So I mean, this was coming.
mm.
It just all came at the same time.
Right.
uh, so what's going to change this is it, well, first of all, a lot of things have to change. I mean, we need more housing built. We need other uh, people on the life cycle of housing to move into other housing, and people are moving. But we, as an industry, during that, for sure, the 3 months of most stay-at-home orders for most of the states, we lost that 3 months of inventory going on the market,
Hmm.
and then we have not caught up. So it's
Right.
supply and demand is like gravity. So when is it going to change? It's going to change when you start seeing supply and demand in line. But I think this trend is going to last for a while, because I believe that situations like pandemics have very long memories.
Mm.
We saw it after 9/11. The safety security needs of Maslow's hierarchy of needs is, well, if you think about it, I mean, what was the first is, you're just your physical needs. Well, think about what we ran out of first was toilet paper. So you don't get any more physical than that, right? And now we're running out of housing. So we're running out of these key, or I say running out of, we just don't have enough of it. And you can't build a house fast. And then you have other issues such as construction costs and that kind of thing.
Well, it just reminded me of how I used to walk straight from my car into the airplane at the Long Beach airport without any security. And the
Yes. Well,
Maslow
that's,
hierarchy of needs basically says from 9/11, like everything's got to be locked down. So, yes, that's an interesting point. One question I have about what you've said is that when we look at that 79 million boomers coming in, is it possible that there just really wasn't that much supply of houses at that time? And so nowadays, as these millennials come in, there's a huge supply of houses. So do we really need to build 91 million new houses and 79 million new houses in the boomer time? Or is it about refurbishing old houses, or is that old inventory is just going to be dead?
well, people are living a lot longer. I mean, the people that used to would have passed
Mm,
away and their housing would be revitalized and turned over into the next generation are not passing away. I mean, people life cycle or
okay,
life.
so that's another
It
lifespan.
just, that's the other thing. But the thing is we already had a delta loss. I mean, a delta of not enough
Mm,
between 79 million and 91 million. So even if they all paired up, we were already short
it's
about 5 to 6 million. And if you look at the trends of other industries, I remember it when my children were in elementary school. They couldn't add trailers fast enough because the population of the elementary school students, the baby boomers were birthing the millennials.
Yeah.
And that trend followed all the way up. Now, there will be a change because the next generation after the baby boomers, there's 15 million less of them. So that's when you'll start to see the change. But in the meantime, we need to house all these millennials while we continue to house baby boomers.
And the other thing is that you didn't mention is that interest rates have been, at kind of all-time lows.
And that gives purchasing power to the
Right.
buyer.
Right.
It does also create some urgency because as interest rates go up, then they want to move forward. Yes, that's true. And when people look at, well, housing prices are going up, and I'm like, well, actually, if you just took the trajectory of a 4 to 5%, which is a normal appreciation for housing over the last 15 years since the crash, we're just where we should have been. We just are doing it all at one big swoop. And the market actually needs this, believe it or not, Andrew.
Mm.
And this is why housing is valued by lenders and appraisers based on comparables. So, comparables that have to close and settle. So, if every next sale is based on the last sale, you'll never go up,
Mm.
right? So, the market needs
New
periods of
transactions.
time where buyers will pay over comparables. They will waive appraisals, bring more cash to the table, pay cash outright and not even get a loan in order for more sales to be higher for the next home to be able to sell higher. And this really truly is one of these things that really, I believe the market needs about every 10 years. And
Yep.
we haven't had one since, the 02 to 05 range. So we're
Mm.
actually 20 years, 15 years behind.
There's so many questions I have because we got an expert on, so maybe I'll just ask a couple more and we'll get into the story. The other
Certainly.
thing that, what's amazing about the US, and it's very different from, let's say, in developed Asia, as an example, is there's simply no way a bank could give you a fixed rate 30-year mortgage. But in America, that's, typical. And for a bank to hold a 3 to 3.5% fixed 30-year mortgage, they're going to die. I mean, what happens if rates go up? And so I suspect that most of the banks are pushing this on to Fannie
They
Mae
don't
and Freddie
hold it.
Mac. They're
Oh, they
pushing
don't
it.
hold it. It's
Yep.
all Freddie and Fannie driven.
Right.
Yeah.
So that's a unique thing about the U.S. market, where we have a secondary market in the U.S. that just doesn't exist in many, many other countries, which means the federal government ultimately finances that by funding Fannie Mae and Freddie Mac through long-term borrowings that are close to Treasury rates, let's say. I believe that's the main source of funding. I haven't looked at Fannie Mae and Freddie Mac. But ultimately, if interest rates rise, it's not going to be the banks that are going to be holding that potential loss. It'll be Fannie Mae and Freddie Mac. Would
Well,
that
the
be?
investors, they're sold.
Yep.
They're sold. So the investors are holding it.
Yep.
Um, yes, I can see how you would say that. If you think about the economy, though, being able to move the velocity of money.
Mm, mm.
So when the bank has to hold the money, hold the paper, then there isn't any velocity. So this creates velocity. And as goes housing, so goes the economy. I mean, think about everything that is generated, um, jobs and economies based on housing, because
Yep.
there is some, I say, justification for it. I understand it. It really comes out of, the again, after what happened after World War II, and they realized they needed to stimulate the economy, and housing is going to stimulate the economy just about as fast as anything.
I have a theory, and that is that Fannie Mae and Freddie Mac could now probably be privatized, and rather than be on the government's uh, side, that government did a great job at setting it up and getting it going. It would cause interest rates, it would cause Fannie Mae and Freddie Mac's funding to rise, the cost of their funding to rise, but it may actually prevent some incentives of super low, being able to do super low rates. But of course, super low rates are fantastic for the consumer, but sometimes that can bring risk. Like Fannie Mae and Freddie Mac experienced some pretty troubling times, in the 2008
Well, that
crisis.
market really was different. Okay, because this is not
Mm,
my first rodeo. I've actually
right.
been through several of them. I've done
Yes.
real estate since early 80s. This is a different rodeo. So what was different about that was that the lending guidelines were so loose. You really just had to breathe. and show up and sign.
Yep.
And
Right. And
now the lending guidelines do follow the, credit and collateral,
does that
and
mean
so
that
they're,
I remember FHA was pushing Fannie Mae and Freddie Mac to have more and more loans that were at lower and lower quality because of a political motive at that time, which was fascinating. And then they had to push the banks to get those loans, which then brought maybe 1 million new borrowers into the market and home buyers, which then put a lot of pressure on prices, as I recall. Does that make sense as to what happened then?
yes, it was a, which was, first wagging the dog. Um, the There was a lot of demand for, and there was demand to keep the economy stimulated, and there was demand to, um, so it was in a lot of ways artificial. This
Yep.
is different. So
Okay.
this is different because we really do have people who need houses. I
So,
mean, it is real as it is. I mean, I see them, and I get back to, this is not my first rodeo, and I'd been through the savings and loan crisis in Texas, and I that was different too. That
yeah.
was really driven by the savings
Funding
and loan.
costs shot
Right. It
up
was,
when
yeah,
deregulation of deposit rates. Yeah.
yeah. So that was, those were different. This is really driven by true demographic need.
So that's great, and I think that's interesting, and that's a great point. So I really appreciate the discussion. I have one last little question about this. When we look here I was just looking across the Asia. The Philippines economy crashed by 9% negative. Thailand and all their economies, the only economies in Asia that didn't have negative GDP were Taiwan and China, which were both roughly about 2%. But all the others had negative, and Philippines was the worst at -9. We're getting crushed over here. There's like this huge economic crisis caused by COVID. And then I'm just looking like, is there a crisis in America, or is the COVID like you'd think, like millions of people are out of work? Or like I noticed, for instance, my one of my nieces, I would call her kind of the Zoom class, or maybe the Zoomers, where she's got a great job, she can work from home, she's getting no cuts in salary, she can travel around the world, in fact, or around the U.S. and do her job from anywhere. She just borrowed some money and bought a house. But is there really a crisis going on in America, or is it just a kind of a small blip right now?
Oh, I'm sure there are people that are challenged. I mean, it really, anytime you have something, of this impact, there are people. The people who are, their professions or their careers are based on intellectual knowledge. In a lot of ways, it accelerated um, their professions in a way that, would have taken maybe a decade to get to, and it accelerated some industries like, for example, Amazon. I
Hmm.
mean, uh, and I liken it to, my parents are in their late 80s, and I never thought I would ever see the day where they would buy something online. But Walmart will deliver it to them, and they believe in Walmart.
Yep.
And so we had some major, major paradigm shifts of people, the way they looked at things. And because when people, that kind of change happens, there's a lot of disruption, but it can be, it's what is it? The symbol of, of crisis is, opportunity
Opportunity.
and
Yep.
danger, right? So
Mm.
there's always going to be some people that are going to be impacted, and
Yep.
certainly there should be provision for them. But the people that are in professions and industries that are, um, you know, there's a lot of them that have
Mm.
huge growth through the
Mm.
pandemic. I will say the more related it is to that Maslow's hierarchy of needs,
That pushes
the
everybody. Yep.
it does, because those are when you talked about 9/11, that's why I feel like that this impact of the pandemic is several years at
Yeah.
least.
Yeah.
We have very long-term memory about, we as a human race have very long-term memory about these kind of things. It
Mm.
changes behavior.
Yeah. That's
And when
fantastic. Well,
behavior changes, that's when you have real change.
ladies and gentlemen, that is an update on the U.S. real estate market by Karen Briscoe, who is absolutely an expert in it. She's also a 5 minute success expert. We went over a little bit over 5 minutes, but if you want to learn more, go to her podcast. You can come to the show notes, or just go to your podcast app, Overcast, or on your iPhone, and type in 5 minute success, and you're going to find Karen giving a lot of great value. Well, now, after that amazing discussion, now it's time to share your worst investment ever. And since no one ever goes into their worst investment thinking it will be, tell us a bit about the circumstances leading up to it, and then tell us your story.
Well, I told you this wasn't my first rodeo. So I was in commercial real estate, and when I in early 2000s went over to the residential side, and it was in a rising market. There's the quote that don't confuse brains with with a bear market, right? So it may be just you happen to be in the right place at the right time, right?
Mm.
And I was doing very well. I met with success very rapidly, and that came to the attention of uh, one of the top agents in our market area, who happened to also be number 10 in the entire nation. So that's Sue Huckabee. So when you made the introduction, the H in HBC, and she asked me to join her, become a partner, and I did. And that was in the '06 reign era. And then we were still selling houses at, like, crazy numbers. But then you could feel the market shifting. And because I was in real estate in Texas, I felt it shift, but I will say it, didn't move fast enough. But what happened was I took over this very high end luxury business with high overhead, and Sue was ill and she passed away in the summer of '08. Or she passed away in September of '08. We transferred the company in the summer of '08, passed
Mm.
away in September of '08. You know what else happened in September of '08? Financial markets crash. So looking, at that time, it felt like the worst investment decision ever. About 6 or 9 months later into it, I was like, oh my gosh, what have I done? I was considering making um, going into other areas of real estate like brokerage, or being a broker or management or something, because it went that far 180 degrees that hard, and that the overhead was just.
What were the main types of overheads that you had to pay? Like you writing checks and going, "Oh my God."
Yes. Well, she was running a very high luxury business. And at the time, print media was the way most of the marketing was done. And so, there was this one magazine, luxury magazine, that was $5,000 a month for the back cover. And she had always had the back cover. So I was like, if don't have the back cover, then what does that mean about, my ability to carry on? And I remember calling the publisher and I said, so what would happen if I, do I have like a contract? What would happen if I just, he goes, oh no, you just need to tell me. And then I called him back. I was like, okay, I'm telling you.
Telling you.
But there, like I said, some of it was hard to move fast enough. It was like a big ship, you're moving it. And there was a number of times where I was like, did I, maybe I should have just stayed a single agent and done my deals, and taking on this huge business. So that was my, at the time, felt like the worst investment decision ever. Um, so
What
the
was like the worst part? Like, can you remember the check you had to write, or the time that you just realized that I can't go on with this business the way it is?
I was standing outside the elevators with our broker and the other owner of the office, and I said, I don't think I can do this anymore. And so that was when I started exploring my other options. Um, and I think I would have had a great career doing that. So it wasn't, it was good that I had other options. But yes, it was that one at, staffing, you have employees, and, what do you do, making decisions about people that have been with you a long time. And the main thing was the market's perception of the fact that I would have failed,
Mm.
Sue Huckabee, because she was very dear in the community and I knew her from church. And so the idea that I would go to her husband and say, I can't do it. And so, but that was kind of part of my, what I how I got out of it, if you will, or how
Mm.
I moved forward is a better description. I did go to him and I said, okay, so it's really not going to benefit you or me if I crash and burn. So he worked with me. I had a past client who came to me and said she was interested in getting into real estate. And I'm like, really? Really? You want to sell houses now? I mean, this is when it's the bottom of the market. But it was that renewed energy, that in spirit. And I was originally going to let her take over the company and I was going to do something else, but
Mm.
that renewed energy um, helped. And, you know, we didn't make any money that year in 2009. But 2010, it was the other reason why it was so hard, Andrew, was that every deal was so hard. It was the era of the short sales and foreclosures, and there's no
So
money
much
in.
pain out there.
Oh my gosh! And the people, their stories, it was so, um, that really is. A, it was just emotionally hard. It
Mm.
was emotionally hard to help people through
Yeah.
to the side, and
God, there's nothing worse than knowing people need help and knowing you're not in a position to help. You know,
well, in the sense that we were able to help a lot of people. It was we I found an attorney who started a kind of a program to help people through short sales
mm.
and negotiate with the banks. And so we learned a lot, but it took several years to work through all that. It was not an overnight
How long did
recovery
it
at
take till
all.
you could say, okay, we're kind of back to where we were?
Oh, we didn't get back to where we were till last year.
Yeah,
Well, oh yeah, 2020 was the first year the team production was back up to 100 million, which is what Sue had been selling. And
that's a great lesson right there for the
yeah.
listeners. You know, look at just the Thai stock market. I came into work in the Thai stock market in 1993. It was at its peak, and it fell by 90%. And it took, almost 30 years, and we're just barely touching that prior peak. So never underestimate how long it takes to get back to where you were.
And so that's, where the 5 minute success came in, because many people, learned how to navigate the challenging market, the crash and recovery.
Mm, mm.
But I had the added circumstance of my partner dying. And that really had a lot of people really want to know how I did it. And so I was doing a lot of coaching and speaking and training, and over again, I would hear from people that they didn't have enough time. And that was another one of my big epiphanies along the way, was that I felt I didn't have enough time either. And
Mm.
so when I came up with this idea of, well, do you have 5 minutes a day? The whole 5 minute success concept came about. And it was this epiphany that um, that I was at a training event, a coaching event, and we were all supposed to share what was stopping us from being what we wanted to be. And I had this light bulb go off. I was like, well, I'm the only one stopping me,
Mm.
because I can change me. I kept waiting, Andrew, for the market to change, or my husband to change, or people to change, or things to change, situations to change, for me to have more time or
Mm.
money to do uh to write the book and to work on the things that I wanted to work on. And I had a faulty perception, a limiting belief perception, that if I took the time to do those things, then my business would suffer.
Right.
And so that was also part of my whole limiting belief.
Mm.
So what I found over this last 5-year journey is that investing in myself is actually the best investment ever. It is the greatest asset, and even Warren Buffett says that. So when
Yeah.
people ask him, well, what's the best investment, he says, well, invest in yourself and your knowledge and your
So
skills and your
let's
abilities.
summarize what you learned.
Well, I learned that investing in myself is worth it. I am a worthy investment. My ability to create value is my highest ability um, to do anything, much more so than any asset, right?
Right.
My knowledge and my ability to create value and help people is my greatest asset. I learned that. And I also learned that um, I'm very resilient. When the pandemic hit, it brought back a lot of memories,
Mm,
right, of the crash. I'm sure, other people have experienced that as well. Like, what's going to happen to the economy? Are people ever going to buy a house again? Are they ever going to leave their house again? Um, and I had some kind of flashbacks, if you will. And as we worked through the pandemic, um, and we worked all the way through. Virginia was
mm.
considered an real estate essential service. We were with banking, and we were allowed to conduct business. As we worked through the pandemic, we really that's what we realized is how resilient we are.
Hmm. That's yeah. I mean, maybe I'll share a few things that I take away from your story. I
Yes.
think first thing is, yeah. I mean, that's one of the things that's great about getting older is that we have a, somebody asked me about about confidence. The young person said, do you ever lose confidence? And I said, I don't lose confidence. I'm more worried about people losing confidence in me these days and my ideas and my implementations than I'm worried about losing confidence in myself. I can charge on in anything, and I've once you made it through, I say confidence to me is built by overcoming, having a record of overcoming challenges, and then you start to feel better. And I feel like you reminded me of when this whole pandemic came. The first thing that I did is basically say, okay, we're going to have to cut, but we're going to make our business better through this. Now, follow me. Let's go. And we did make 2020 a great year. Now, my other business, my coffee business, which is a roasting business supplying coffee, suffered tremendously as opposed to, let's say, that intellectual capital business. But we knew my business partner and I had been through this before. So I think the first thing that you remind me, and for all of the people that have been through a lot of experiences, take those experiences and turn them into your confidence. The second thing, you said a couple of things that I wrote down. The first one, as you said, I can change me. Yeah, I just almost have tears when I think about that. And I just love that quote and I love that concept. And I just want to tell the listeners, you can change yourself. You can do it. There's no guarantee you can change anybody else or anything else. Maybe, but probably not. But you can change yourself. So that was something I really liked and what you said. Now, last thing is, you remind me of when the darkest hour for our coffee business, it was after the 1997 crisis in Thailand. And I had lost my job as a banker, as an analyst, and our business was just, on the ropes. And we moved into our factory. We were out in the countryside outside of Bangkok, and I found a book, and the book was called The 6 Month Fix. While you were talking, I went to Amazon to go look at it. It's called The 6 Month Fix: Adventures in Rescuing Failing Companies. I'll put a link to it in the show notes. But basically, it's written by a guy named Gary Sutton, and the first line of this book just really, really pissed me off when I read it. Karen, oh my God. He said, "Hi, hello, Mr. CEO. I'm the turnaround guy. When I come, you leave. And I turn around your business because I can do what you can't or you won't." And that just got me so fired up to say, I'm going to read and learn everything I can from this guy and show that I can change and I can. And I would say the core message comes, down to the one thing you can control in your business today is cost. And you describe that about having to go and say, I've got to cut that advertising budget. I've got to cut. Now, you're never going to get rich from cutting costs. You've got to get that upside. But in times of crisis, the first thing that you can do is cut costs, and you can control that. So that's some of the things that I took away. Is there anything you would add to that?
Well, that was a great summary. When you talk about changing you, one of the things that a quote that that really helps me is the quote by Jim Rohn, and that is, change the way you look at things, and the way you look at things changes. Because the changing you and is first going to mean change the way you look at things, because whatever got you here is probably not going to get you there. So you're going to have to change their perspective. And every time something happens and we're all like feeling like what are we going to do? We just start thinking about different ways of looking at it. And you could get kind of creative and fun too with that.
Yep.
But you changed the way you looked at things. And that's what enabled you to change.
Mm, love that quote. Just more gold, dropping more gold on this episode, Karen. I appreciate it. So, based upon what you learned from this story and what you continue to learn, what one action would you recommend our listeners take to avoid suffering the same fate?
Is to take action. The what you focus on expands. What you put energy into is what you're going to receive back. And if you want to attract something new in your life, and or you want to attract um, anything good in your life, you need to take action towards it.
Yep. So, last question. What's your number one goal for the next 12 months?
So the real estate success in 5 minutes a day is birthing other books, the 66-day challenge books of each component of the 5 minute success principle. So the commit to get leads 66-day challenge is out, as is the consult to sell. And then there's two more coming. The connect to build and grow, that's about creating scale and systems and leverage. And then the other one, success thinking, activities, and vision. Those books are coming out in the next year. And also I'm expanding my coaching business. If people are interested in that, they can go to the website, the number 5 minute success, and click on work with Karen, and you can get a free 30-minute consult. And would look forward talking to people in your community who are interested in how 5 minute success could help them.
Fantastic. Well, I'll include that link in the show notes, ladies and gentlemen. And you'll have all the links so that you can learn all about Karen's books, the podcasts, the coaching, all of that. Well, listeners, there you have it, another story of loss to keep you winning. My number one goal for the next 12 months is to help you, my listener, reduce risks and increase return in your life. To achieve this, I've created our community at myworstinvestmentever.com, and I look forward to seeing you there. As we conclude, Karen, I want to thank you again for coming on the show. And on behalf of Ace Dots Academy, I hereby award you alumni status for turning your worst investment ever into your best teaching moment. Do you have any parting words for the audience?
Yes, if I can do it, you can too.
Love that. And that's a wrap on another great story to help us create, grow, and protect our wealth. Fellow risk takers, this is your worst podcast host, Andrew Stott, saying, I'll see you on the upside.